I think to make a connection too, just with the residential to the commercial, they're one and the same because they affect each other. You
Sure.
know, because the cost of buying a townhome and a condo is the same as buying a house now, people are going to decide to rent instead of making that decision to buy. And that's why the commercial is building more, because they know we're going to have more renters.
Welcome back to another episode of the Estate of Wealth podcast for your weekly dose of market updates and expert insights. Alongside me, as always, Aaron Levitt, and today our guest is DeLorean McMillan. Yeah, thanks for coming on, D. Sometimes we call you D, sometimes we call you D Loans. You know, we were just talking about this earlier, but you have such a cool name. It's DeLorean. That's correct, right?
DeLorean. It's
DeLorean.
Yeah, however you want to put it, though.
Okay. I keep saying DeLorean for some reason because I think that's the car from that movie, Back to the Future.
Yeah.
But so, I think everybody knows him as D-Lo in the Denver area. You know.
Yep.
Yeah.
It's an easy name to remember.
Yeah. No, it's nice.
Yeah, it's funny when I tell people about my name. It's like it's DeLorean. It sounds like DeLorean, and it's nothing to do with the car.
Yep. Have you seen the movie though? Are you a fan?
I have. Yeah. Have you seen the new DeLoreans, like the all ones they're thinking about coming out with?
Oh no, I didn't. Yeah, that sounds neat.
Suicide doors.
Yes.
Fast. They're pretty cool.
Sweet.
Okay. All right, D-Lo, tell the people who you are. You know what you do and how you got started in it.
Yeah. So I'm a mortgage broker. I'm with Home Loan Hoss, and I'm D Loans there. That's my stage name.
Nice.
And I got started back in 2020 during COVID. So I was working at the car dealership. I got laid off, and it gave me a lot of time to think about being attached to a business, a physical place. It's not 100% secure. And I think a lot of people, had that rude awakening during 2020 that their job was no longer secure, if they worked at a physical job. So that kind of gave me the insight of okay, I got to find something else to do. I can't be working at the car dealership. I knew it wasn't something I want to do for the rest of my life anyway. So It was just kind of perfect timing in a way. And then I'd met a fellow Marine. He's a business owner, owns multiple restaurants around the Denver area. And he's like, D, maybe you should think about this. And I was like, you hear about real estate agents, and then you're like, what is a mortgage broker? And it's like, no, it's not the same thing as real estate agent. And then sure enough, I did a little research. I was like, okay, I'll try this, finance for, real estate sounds cool. So I got licensed in November 2020, and then, I haven't looked back since.
Nice. I forgot that you're in the military. You said Marines, right?
Yep.
How long were you in?
So I was in, a total of 6 years, but you have
means,
an 8-year contract. So, yeah.
Okay. All right. Well, thank you for your service. I always forget to mention that, but appreciate you doing that. You're no longer doing that. You got out though, right?
I am out. Yes.
Yes. Okay. Gotcha.
It's so cool to hear how many people have started in some similar fashion in sales and how it correlates to to the real estate industry as well. I hear a lot of people have started in either, customer sales over the phone or car sales. And it's just once you learn those invaluable lessons, it transfers so well.
I totally agree. And it's, I think sales is not so much sales, it's finding a problem and, helping solve that problem. That's really all it is.
Absolutely.
Sure. Love that. Yeah. All right. Let's jump into some of these quirky questions that we have for here, sir. I love this first one. This goes to all of our guests, so I'm really excited to hear your answer. If you could live in any fictional home from a movie or TV show, which one would it be and why?
So I don't know if you guys have seen that newer show about the Menendez brothers. It's a little, definitely not, PG-13, but the home that they live in is exquisite. Spanish style roof, 2 stories.
Okay.
I would say something like that, and hopefully with a little bit more backyard.
Okay.
Interesting. Is it more of a Spanish style architecture?
It is. You walk in, got some of the spiraling staircase to the top, the wide concept on the interior, and then the backyard was okay, but I would want something a little bit bigger just because, and why is because I'd like to do some homesteading. I think a lot of people, like, especially nowadays, like, they're kind of moving away from moving into the city, and they're like, I want some land. I don't want any neighbors.
Yeah.
So I'm on the kick. I'm on the kick myself.
I love it.
Okay. No, I dig it. And then where is it going to be? Is it going to be in Colorado, West Coast, East Coast? Where are you putting it?
That's a good question. I've, me and my partner, we've considered living outside of the country as well. We're not set on the U.S., but if it was on the U.S., I would probably say I love Colorado. Yeah. It's just like such a great mixture. It's hard to beat. Being from California, like Colorado is like the perfect mixture. You got cooler people in California. Californians, hey, it is what it is. But yeah, Colorado just kind of hasn't beat.
Yep, absolutely. No, I totally agree. I'm actually from upstate New York myself, and Aaron's from Kentucky. And I always joke that the best of us made it out here in the middle.
It's the truth.
Yeah. All right. Question number 2. Imagine you're a real estate superhero, which we all are. We've been in this game a long time. We all have our superhero qualities. What would your superpower be, and how would you use it to close deals?
So my superpower would be being a super connector.
Okay.
I love that.
Very well with people, and just understanding, again, what some people need and what they don't have, and then what people do have and what they're looking for, and just being that connector. Because that's an easy way to close deals. You know somebody that knows somebody that's looking for what you got.
Yep. We were at Race Fest together, right? You went to Phoenix? Yep, earlier this year. I'll never forget Pace Morby up on stage. He first thing he did was put a creative financing deal together, and he said he met somebody at lunch, and they were selling land, and he asked somebody in the audience, if anybody wanted to buy it, and sure enough, somebody raised their hand, and he said that's how easy it is just to connect and bring people together. Yeah, I love that. That's such a cool superpower to have. I love it.
Yeah, it's big too. Like just making genuine connections with people and them knowing you and just liking you and trusting you, like, super important, because I think all of us, we get to a certain point where the money doesn't matter and you just want to work with good people. And, if you can do that and make money, that's the best of it.
That makes the win-win, right?
Right.
Absolutely. All right. Question number 3. If you had to describe your investing style in terms of a movie genre, comedy, drama, action, etc., what would it be and why? We ask the hard questions here on this podcast.
In the hot seat, if you will.
This is probably going to catch you guys a little off guard. Okay. So I would say The Walking Dead. Okay. And the reason being is because, everything is kind of like, everything around us is crazy right now, so to say.
True.
We're in a very unstable, or we don't know what's coming around the bend for a lot of us, right?
I think we all agree with that. Yeah.
We have predictions, but none of us really know.
Sure.
We don't got a crystal ball. We can't tell you, hey, this is exactly how it's going to play out.
Yep.
So the uncertainty of The Walking Dead, right? They have to go place to place and secure it for as long as they can until they have to move to the next spot. So when I think of investments, it's like, okay, finding out the calm in the storm, right? Because like Walking Dead, everything's going to crap. So finding out the calm in the storm and then working with it until it's no longer the right vehicle for you to use.
Yeah.
Sure.
I don't think one method is going to take you to the top necessarily. Like, yes, you can find a niche, and yes, you can get really good at it, but it doesn't always mean that one vehicle is going to be the right vehicle, or if it's going to always be stable.
Absolutely. It's an ever-evolving thing. And I think the way that they keep their heads screwed on straight while the chaos is happening around them on that show, it definitely speaks to a little bit of what we're seeing right now. Yeah.
And to add to that too, like, it's also showing that in order to get to that safety and kind of have that growth, so to say, you got to take a risk. Because every time I go to a different place, you got to risk a little bit.
You got to run past the zombies.
Yep.
Got to run past the zombies. You know?
Yeah.
If you're just if you're staying and you're going to stay there forever, you're probably not going to make it.
Yeah.
So you got to find the next investment to go towards.
Yeah, no, I love that. That was a excellent analogy. Just being able to pivot, and overcome these obstacles, in the daily life of a real estate investor, or if you're on the side of being an agent, or helping someone else through their investments. You have to be able to see all sides, if you will. Just a couple weeks ago, Aaron and I were at the multifamily investment conference. And
Nice.
One of these speakers, made this point, and I, personally, I had never heard it before. Maybe some of our audience have, but he asked an interesting question, and he said, "How many sides are there to a coin?" And immediately I knew it was a trick question, and I'm like, okay, so obviously the answer isn't 2, and he said 3. And the idea as an investor is you kind of always want to be standing on that edge, never committing necessarily to one side or the other, but just expecting that coin to fall. And being able to have that perspective on the edge of the coin, on that third side, if you will, to be able to see both directions, you can kind of prepare for, again, that inevitability that the coin will fall. So, I like your analogy as well, too. I was always a big fan. I had to stop watching at one point. That Walking Dead got kind of out of control, and I don't even stopped. I think I stopped after I think Carl died or something like that. I was like, I can't do this anymore. I can't. But it did go on for a long time. Yeah. All right. Question number 4. If you could swap lives with any famous real estate mogul for a day, who would it be and what would you do?
I would say, and he might not be as famous as others, maybe not like Grant Cardone or Tony Robbins, but sure. I would say Bridger Pennington.
Ooh, okay.
Familiar?
Oh, yeah, absolutely.
Yeah. So, man, Bridger, 28, you know what he's doing, managing millions and millions of dollars in the private equity space. And I'd love to be in that position and meet everyone he knows, and just pick knowledge from everyone he knows, because they're doing it at the highest level,
Yeah, and it kind of goes back to the same thing that you started your questions with. It's a relationship based game, right? Mm-hmm. And only upon knowing this person who knows this person can you provide a service of solving problems or get deals done.
100%. Yeah, so definitely be Bridger, and I would say it says something. A man his age, being 28,
sure,
being successful as he is. It's like there's a lot we can learn from him.
Oh, yeah, absolutely.
I agree.
Yeah. I see his Instagram all the time. He's got some funny little clips, that he puts out there. Some of them are really entertaining. So I definitely give him a lot of credit for that, because, I've tried social media off and on at different times, but he's always been very engaging and exciting for me. Every time he's got like a new piece of information or he's giving an update on the news, it's always has that level of entertainment for me there as well, too, that kind of, keeps me captivated and stops the scroll, as they say. Right. He does an excellent job at that. Yeah.
Yeah. I think a lot of us too, like, with just touching your social media point, like it's a interesting thing to tussle with, because it's like we want to be involved in it, but you don't want to be consumed by it,
sure.
And I think that's like the hardest part, is like, how can you be actively in it, but not be consumed by it? So.
Sure.
Yeah.
No, that's a really good point too, because you want to, as entrepreneurs, we want to spend time on there, making money and not wasting our time, scrolling. But it's interesting because I feel like I've got my algorithm set up to see a lot of ads, because I like the marketing aspect of it. I like to see what others are doing out there, to create that kind of engagement. So it's a slippery slope, though, for sure.
Yeah. And I'm sure we all three of us have seen a lot of Bridger Pennington ads too.
Oh, yeah, tons.
Oh, yeah.
Absolutely. Yeah. All right. Question number 5. If real estate investing were a sport, what would your team's mascot be and why?
I would say it would be a ram.
Oh.
And
okay, is that
you went to CSU? Did you go to CSU?
I did not go to CSU. No, actually, my high school mascot was a ram.
Okay.
I'll still give you a good connection. because I just feel like in life I've always kind of had to be a Ram.
Sure.
You know?
I like it.
So it's like I feel like being a Ram, right? As if we were a Ram, like when things approach you, you kind of have to have no fear, you know? You got to be willing to put your head down and go at it.
Okay.
And I just feel like in real estate, you know, no matter what you do, you kind of just need to put your head down and go at it. You know, you can't be on the sideline, be hesitant. You got to be active, and you got to go for it, because if you don't go for it, you're never going to get it.
Yeah, absolutely.
No, I definitely agree with that. And I always think about the shiny object syndrome as well, too. It's like you almost see a head down, or like horses, you have blinders on, you know, to make sure that you're dedicated and focused and you're not getting off track, you know, to the next thing. So I love that. That's great.
Yep, totally.
And being in Colorado, you obviously have to be able to deal with any inclement weather or below freezing. And the Ram can do pretty darn well at that as well.
And also inclement weather in the real estate, man, because here in Colorado, we're kind of in this unique bubble of real estate, I would say, comparative to other states.
Yep, with the forecast yet to be seen.
Right.
Yeah, it's a lot of ups and downs. On that note, let's jump into some of our articles. Now, Dee, I know you do commercial and residential, so we have a couple commercial articles here for you, and I think we'll start with the residential one here to kick it off first, because I know some of our viewers are, you know, in different Airbnbs or different, you know, rental markets, so they're, you know, always intrigued, you know, by the professional updates that we can give them. So I'm going to go ahead and share my screen. Let's see.
Yep.
Yes.
Okay, great. Awesome. So this one comes from the streets. Mortgage rates could revive housing market in 2025. What are your first initial thoughts on this, T? What are you? I know we just looked up the current rate. You could tell the people that at the time of this recording, but what are your first initial thoughts? Yeah.
So current rate at the time of this recording with the 680 FICO, 5% down conventional loan, you're looking at anywhere between a 7 1/8 to a 6 1/8 at par, whether you go lender paid or borrower paid. And I would say this headliner is definitely clickbait. Definitely.
Which we're known for here, you know, at the Estate of Wealth. We try to challenge our guests to see if it's real or not.
And the reason I would say that too, it's like we're always trying to incentivize the consumer to get into the market, right?
Mm-hmm.
And especially here in Colorado, Barney, you've seen it, your agent, there's been a lot more inventory on the market. So with that being said, they're trying to get more buyers in, and they don't have as many buyers as they thought they were going to with the rate cuts.
Mm-hmm.
Because a lot of people don't know, when there's good news for the economy, it's actually bad news for interest rates.
Mm-hmm.
And right now, the biggest problem we're dealing with, and you know, they touch on it in this article, is the lack of affordability.
Mm-hmm.
And a lot of people, since I would say we still have buyers from 2020 that have been wanting to buy, that are still, you know, on that fence of like, should I buy or not? Should I wait? And that's how we back up essentially the real estate pipeline, because it's all these people on the edge, and they're like, oh, I should have bought last year. Oh, I'm going to buy next year. It just keeps on going.
And I think on the residential side, you know, with the dollar not going quite as far as it would have in you know, recent years, I think it's just kind of created this analysis paralysis for a retail buyer as well, because like you said, they're gonna get stuck in their head a little bit, and without professionals like you and realtors who can kind of guide them and relax some of those fears, it could be a bit before we see any of this start to shake up.
Yeah.
Yeah,
and
definitely.
To point out, you know, we had the first rate cut time in September, right? And what that did to interest rates, it actually raised interest rates about, I would say, you know, 25 basis points. So an eighth to a 1/4% movement.
Mm-hmm.
But we were expecting rate cuts. So investors are pre-pricing these rates 30, 45 days ahead of schedule, because they're not waiting last minute to change their rates. They already know 30, 45 days ahead of time.
Sure. Yep, that makes sense. And then let's give the people some speculation here too. So right here in this article, it says, Fannie Mae predicts the average mortgage rate will dip to 5.7% by the end of 2025. Just in a quick high level overview, do you agree with that statement? Do you see that forecast coming true?
Well, with where we're at right now, saying, borrower paid at 6 1/8, I think it's definitely possible.
Yeah, that's fair. Yeah. Yeah. Just from an expert opinion, just what you're seeing, just very high level. We don't have to go deep because, we all know we have an election coming, and then, if there's a transfer of power in January, what does all that speculation look like? And there's a lot of question revolving around that. But yeah, I agree. I think, from 6.1 where we're at down to 5.7, I think it's possible.
Yeah, I mean, we could all agree that we're going to see some movement here. It's just yet to be determined as far as how much movement and what that looks like for the buyers.
And I think without getting too far into the woods, I think a lot of people are waiting to see what happens.
Yep.
A lot of people exiting, holding on to their money, so they don't make any rash decisions until, the election.
Yep, absolutely. All right, let's switch over to this next one and get into some fun stuff with the commercial. All right, can we see this one?
Yes.
All right, commercial mortgage lending poised for growth after 2-year lull. And now, we could talk about this one from a lot of different perspectives because, even earlier this year, we put out a whole podcast, talking about that $1 trillion debt cliff that was coming up for a lot of these commercial buildings. But I think it's interesting now seeing, some of these interest rates come down, some of the people who had bought wrong maybe a few years ago when interest rates were low. I think they're now seeing a little bit of reprieve. But what are your thoughts on, going into 2025 with this potential growth that's poised?
Yeah, I would say, definitely after the last years, or let's say last 4 years since COVID, how
Fair.
much the commercial side took a hit. I think they're still actually recovering, and yeah, they bought low, but most commercial loans, they're adjustable. So they're climbing and they're climbing. So really they could be at today's rate and they'd be in maybe, the third or fourth year, right? Say if they bought on the end of 2020, and they might not even be able to refinance, They might just be where they're at. And they have to make a decision based off of that.
Yep. And I think a lot of the deals that Aaron and I have been looking at even today, to get into, they put these kind of reserves aside, just in case over the next 3, 5, or 7 years that they're not able to refi, they'll have this kind of like little kitty pot of reserves that can actually buy that interest rate down, which I think has been an interesting strategy so far, when we've been underwriting all these deals. But it still leaves me a little concerned, moving into, some of these larger commercial deals. So I think that's good, that these the numbers are showing that it's poised for growth. But I guess we'll just kind of, have to see how this all really trickles down.
Yeah, I think the interesting thing to point out with this article that I really love that they're talking about is not only are we seeing a lot of these mortgages start to be retraded, like you said, D-Lo, but it goes on to say that more than 900,000 units are under construction and about 500,000 new units are expected to be completed each year. So not only are we seeing the trading of the loans and the debt that was already in place, we're also seeing, the fluctuation of the units that are online and how quickly those are finishing as well. And, it goes back to the supply and demand of housing. And kind of how it affects itself.
Yeah. And just like the last article too, I would on the lack of affordability, right? So, the first time home buyer nowadays, and even in Colorado, you're going to have to be looking at a condo or a townhome. It's not where you can buy this house, for your first property. It's like, no, you're going to actually have to consider something different. The American dream of home and land is actually slowly shrinking. And like myself, I got a condo, so I bought 2021, and I actually was it 2021, 2022? So I started looking in November, and I didn't find a home until 2022. And it was super crazy because all the offers, my offer was maybe 10,000 over list, but I was getting $50,000 over list price. I mean, I have a neighbor that's down and adjacent from me. She has the same layout and she paid $40,000 over for a condo just to get into a home. So I think like many people like myself, thankfully, the baby appraised. I got a little equity now, but
Nice.
like a lot of people, it was a shock. And a lot of people who are buying now, they have this idea, but it's not as attainable as they thought.
Yep. And not to jump too much into residential, back and forth, but I think I totally agree with you. I think there's kind of a shift in the mindset, whether it's about this, great American dream, that we talk about, white picket fence and 2 kids and a dog and maybe a cat too. Essentially, even to your point earlier in our conversation, about homesteading, I think a lot of us are kind of moving farther out of the city. So it kind of becomes this, juxtaposition because, I live in Boulder and I would never live in Denver. You mean like, not that Denver's not a great city, but I wouldn't live in any major city. I like having access to it and being 30 minutes outside of it. But I love looking at my open space every day and not having to, stare at my neighbor. But I do think that is kind of like a split mindset because I think other people love the walkability. They love living downtown Denver and being able to walk to their corner store or walk to their local bars and walk to, wherever it is they need to go. So it's an interesting kind of split, I think, that we're seeing, with this, new generation, from the millennials down to the, Gen Yers and the Gen Zers. Did I say that right? Is that wrong? No, yeah, because the Gen Xers are the one older. I always get it backwards. But anyways, so the new generation coming up, you're seeing a lot different decisions, being made. And I think that's happening with a lot of the construction as well, too. You're seeing a lot more of these row homes come out. You're seeing a lot of these, build to lease or build to rents that are more suitable for a minimalist lifestyle, more so than the grandeur of having, 4 or 5 acres and these 4,000 to 6,000 square foot homes. So, even back when I got my license in 2017, I kind of always speculated. I was like, are people kind of like downsizing a little bit? Because 4,000 square feet's a lot to clean, in my opinion. But I guess if you had that, you could always hire a house cleaner as well too. But definitely, I think these mindsets are slowly changing, and they're changing the mindsets of these builders and developers, because we can get into all kinds of conversations about Austin and how that's overbuilt down there as well too. But then we can talk about some of these other areas like, Des Moines or, other places in Iowa that need, are hurting for some new construction that hasn't arrived there yet because the population has kind of exploded in some more of these Midwestern-y towns. But anyways, I digress because I think it's
I think we're in a really, really cool market to kind of watch this shake out in front of us, right? And Gilo, to your point, hopefully we don't get to the Walking Dead scenario where we're trying to run past the zombies by any means, but I think there is going to be a lot of opportunity out there, and like you said, Barney, with people reconsidering their needs and what they need to live and how their living space looks, I think we're going to see some pretty transformational shifts in how our generations and younger are looking to live.
And I think to make a connection too, just with the residential to the commercial, they're one and the same because they affect each other.
Sure.
Because the cost of buying a townhome and a condo is the same as buying a house now, people are going to decide to rent instead of making that decision to buy. And that's why the commercial is building more, because they know we're going to have more renters over the next couple of years.
Yep.
A lot of people just won't make that decision to take the leap because they're like, okay, I'm gonna have to pay probably, $600 to $1,000 more for a condo or a townhome when I'm in already, or I can just rent.
Right. Yeah, that's an excellent point. I really do see, in the future, we'll call it the next 5-10 years, I could even see workforce housing becoming more of a thing. We have some friends who are building a factory down in Colorado Springs. What's called Florence, I think is actually the main town. But anyways, building these tiny homes, and they've got a lot of LOIs out there, and people who are already trying to purchase these. But most of them are large contracts for workforce housing for things like hospitals and schools. So I do see this kind of potentially becoming a trend over the next 10 years when people again start to reconsider what it is they're looking for as far as their lifestyle goes.
Definitely.
Mm-hmm. All right, I think we got one more article here coming up. Let's see. Can everybody see that one?
Yep.
All right. This one's a little interesting because this kind of trails off of that commercial conversation we were having about this debt cliff coming up. But this one is from CNN. It's entitled "Wells Fargo is selling off billions of dollars in commercial mortgages." Now, again, clickbait. But what are your initial thoughts on this one here?
My initial thoughts, always the biggest question I have is why, and what are they going to be putting their money into besides commercial mortgages if they're moving billions of dollars? What is the next best investment?
Yeah, that's a great question.
They're obviously putting their head down, running into something if they're selling off billions of commercial notes.
Yeah, no, I don't know. Like that speculation, like I said, workforce housing, what other kind of energy efficient things, what are they? Are the new chips I see going in everywhere too? But that is an interesting. Yeah.
I'd speculate as much as, maybe even like Bitcoin crypto, it's decentralized.
Potentially. Yeah.
Trying to have a foothold in something like that. That's new.
Yeah.
Because, a lot of people thought it was going to be, pretty gimmicky, like this could never work. But as we see, it keeps continuously growing. And now you have BRICS, they're hopping on into it with their own like XRP and stuff like that. So
yeah, I think it really boils down to everything that we just talked about. All the turbulence in the market is really causing some of these bigger institutions to kind of re-underwrite their risk and kind of really have a better understanding of what they're up for. This deal is expected to close early in 2025, and with doing so, it trades all of their mortgage servicing into a company known as Trimont, which was started in '88. And when that happens, Trimont will be the largest loan provider for commercial real estate in the States, which, of course, we could dive off on that, kind of conversation around whether that creates a certain sort of monopoly or not. But, when somebody has that large of a market share, it's kind of one of those things that could be a concern. But yeah, I think Wells Fargo is getting all of their, risk off their books. And it goes on to say that they're not looking to take on any more new loans until they reevaluate right now. They don't want to write any more loan products for not only retail, but commercial. So it'll be interesting to see how they, handle this over the next couple of years and whether that's a product they choose to offer or not.
Definitely. And I think one thing we should look at is, and you said Trimont, right?
Yep.
Yeah. So one thing we should look into is what is Trimont doing and what have they been doing since opening? Because I haven't heard of Trimont, to be honest with you. So, figuring out what is their actual main purpose, because maybe they're tired of servicing the notes themselves, but they're willing to invest with somebody who has the majority market share.
It's an interesting point too. And just to stem off your Bitcoin conversation, because I feel like we could have a whole nother podcast, and we will, on Bitcoin and all the different cryptocurrencies that are out there. But I think just to stem off your point as well too, I do see potentially another one coming, because I mean they're very easy to create, so to speak, easy as I say, but potentially that could be the route we go. Will it be Bitcoin? I don't think it'll be actual Bitcoin, but I do think it will be some form of cryptocurrency, like you said, that's deregulated. That maybe they're already investing in kind of behind the scenes and trying to work some of those kinks out to see if they could take it to full scale. But anyways, I don't know. I just thought that was an interesting point, because, if they are taking their money, out of this sector, where are they putting it back into?
And, they would never tell us.
Oh, so. not today, anyways. Yeah. Until it's all done. All done. Yeah.
We own millions of Bitcoin. I don't know, didn't tell anybody.
Yeah, we didn't tell anybody. But yeah, by the way. Yeah, exactly. All right. Any final thoughts on this?
No final thoughts. I just think the whole show can be summed up, and there's a lot of moving parts. As Dee said, like a ram, you got to keep your head down, and we're just going to see how this thing shakes out, right? This is the one of the market cycles that we are lucky enough to be a part of. And I'm sure we will have many stories to tell to future future generations down the line, as I'm sure a lot of those guys that were sitting in the back office in 2008 when that started,
Sure.
we're sharing their legacies as well. So just happy to be a part of watching this shake out, whether it's a good thing or a bad thing.
Yeah, I would say for the younger listeners, for sure, like, if there's no risk, there's no reward. So while you're young, put your head down, get after it, because it's okay to make a mistake. You learn that way. And some of the highest level entrepreneurs learn the most when they made their mistakes. So I think that's super important. If you're older, maybe just sit tight, be a little more cautious, totally fine, and see how things play out. But still, doesn't mean wait forever.
Right. I appreciate that piece of advice, D, to the newbies or the younger generation. The one thing I'll add that with is one of the famous real estate quotes is, "Don't wait to buy real estate. Buy real estate and wait." A little cheesy, but anyways, I thought I'd throw it in there. Well, thanks for coming on, D. I really appreciate you. Before we go, tell the people where they can find you on some of your social media handles.
Yeah, so you can find me on Instagram, Facebook, and then YouTube is coming up soon, so it'll be dtown_30. I have a private account, so hopefully somebody that knows me, but if not, we'll figure something out.
Yeah, absolutely. We'll leave that in the description down below as well too. Well, if you made it this far in our podcast, make sure to like, share, and subscribe. And we appreciate you watching. And thanks again, D. Thanks again, Aaron, for always being
here. Always.
Absolutely. And we'll catch you guys on the next one. See ya.
Thank you, both of you.